Welcome and happy 2016 to you. Since I spoke to you just before Christmas, you'll recall we spoke on Australian residential property and indeed market volatility. Well, since then we've seen both those things play out. We've seen the Australian property market come off already, but in particular the volatility in the Australian and world share markets has already come into play. We have seen big declines in markets recently. In particular, coming out of China, we've seen their economy come down, and this has led to their share market coming off and indeed their currency coming off. That's had a direct knock-on effect to Australia and indeed emerging markets around the world. US manufacturing has slowed for the first time in a while, but we've seen volatility come especially from the Middle East, with the tensions there including the Syrian war and the tragic refugee crisis around the world. North Korea has really upped the ante on its nuclear program. So we see this year continuing to be very volatile. The Chinese fortunately have taken off their circuit breaker on their share market so that every time their shares fell 7% they would just close the market. Well, they realised that wasn't such a smart thing because everyone was actually selling to get out before the market closed, so they've stopped that thankfully. But we are seeing the Middle East and North Korea situation continuing. Look, if they led to war, it would be catastrophic, but I don't see that happening. So the outlook for this year is a very volatile one. Certainly from an Australian and global position, we see inflation and interest rates staying low. However, interest rates in Australia are more likely to be cut by the Reserve Bank this year soon. Volatility, well, unfortunately we're just going to have to live with it this year because it's certainly not going to leave us. Cheerio. Thanks.